Hey everyone, it is Thursday. It's about 1:30. The market just closed, and so let's take a look at the charts and see exactly what we're dealing with. Today's not a real heavy news flow day, so other than some corn sales to China, there's not a whole lot fundamentally to talk about. The market's just discounting what they perceive to be the known facts and trying to price in everything accordingly. And we're positioning for the March 31 planning intentions report. That is really going to be the big driver of market action starting at the end of next week. So we'll see what happens. I really think that we're probably about done with our steep move to the downside. I don't think we're going to rally, but I think we'll probably move sideways and chop a little bit into that report. But having said that, that's just my opinion. There's nothing on this chart that would suggest that at all. So this is new crop soybeans, and we talked about this earlier in the week, how this trend channel, we broke out the bottom side of it, or this base channel, breaking out the bottom side, accelerated it, and so now it certainly looks like this chart may want to come challenge this 1217 level, and if it breaks it, could easily put pressure to the downside. From a momentum standpoint, there's nothing on this chart. If we start looking at all of the different oscillators and different indicators that we like to follow, here's all of our main ones. Here's all 4 of them. There's nothing on here that suggests that that we're done going down. Yes, we're probably in the oversold territory. Yes, we're probably due for some sort of a bounce, but this doesn't mean buy it. All it means is that any type of move we should get is counter trend and should be sold back up into the mid ranges of these these indicators, and this trend is just intact and moving forward. So I don't see anything here to hang our hat on that says, hey, this move's about finished. And so no action recommended on new crop beans. Just hold hedges, and I wouldn't look to re-own anything yet or not. We'll see what we get next week, and we'll adjust and deal with it accordingly from there. But for now, nothing. Old crop is starting to accelerate to the downside too. It was off the hardest today, down 30. It is down $1.30 from its peak. And just like the new crop, it finally broke out of its base channel and is headed lower. Certainly, I would look for this to continue on its path, and there's nothing on this chart that looks like it is bottoming either. So there's no bullish divergences on any of our oscillators. And what am I missing? I'm missing our force index. Yep, no bullish divergences on these oscillators. And remember, this is what a divergence looks like, right? This divergence lasted from November all the way through the peak here at the end. This was a really long-term divergence, and it occurred on every one of our indicators. And it's one of those things that it just kind of lulled you to sleep, right? And that's what's causing a lot of the acceleration to the downside. Now with beans, the fund position is still net long, although that they're probably well on their way to getting that trimmed and coming out of that position. And so it won't be long, and they'll be taking a net short position, and I would guess that they can go ahead and push it quite a bit further before they're really extended on that position. Now here's old crop corn. This is the May corn contract. Again, on this one, it's actually probably the best sell setup that we have on this chart if you just look at where the RSI is. So we moved to a nice new low here. We've bounced right back to the mid-level, and it looks like it is potentially getting ready to roll over. For sure, anything below today's low looks to be needing to be sold. And this is the most bullish contract in the entire grain complex, because there's tightness here domestically, and you've got China buying, and it still can't really muster any real strength. The strength that we're seeing keeps getting met with weakness. So our view is to continue to hold short positions. I still like being short in the front month rather than being short in the deferred contracts. And the reason is this: this market is more ripe to fall than the new crop contract. New crop has already done it. And so what I can see happening is either old crop catching up with it the way like beans did today, or we could see old crop actually stagnate or rally just a little bit, or new crop stagnate and rally while old crop falls. So that spread can narrow two ways. It can narrow by old crop falling or new crop rallying. Either one can achieve the same result, and you want to hold your hedges in the front for now, at least in our opinion, and we'll see what we get next week before we make that decision. But clearly this is a downtrend, right? Here's our base channel on new crop corn. We challenged the bottom side of it, and down we go. Let's look for divergences here. There's really nothing here to speak of that would be divergent. If this makes a new low and these fail to come on down, then we could see new crop stagnate and rally up just a little bit off of those divergences. But we don't have the same setup in the old crop, which is why I think old crop is weaker than new crop. I know that's an unpopular opinion in the marketplace right now because everyone just knows it's got to go higher. But that's what this chart is telling us, and I think we got to stick to what we know, because ultimately it could end up looking a lot like soybeans as we race to the bottom. Okay, so that's fun. Now let's look at Kansas City wheat. Really nothing here to speak of either. We have this move to the downside. We have a completed 1 count. Now we've got an A, B, C up, and now we have a 1, 2. So I think this contract is about to roll over here as well, and I think we're probably going to come put pressure on $7 before we find a bottom. Really volatile on this side of things. Now I want to address one issue here before everybody throws stones, because the question is, well, what about Ukraine? Russia is launching a new offensive. They're putting 400,000 more people on the ground. They're going to attack our grain silos. They're going to disrupt grain flow, and that is going to be super bullish wheat, and we're going to send it back to 14 bucks. Well, let's talk about that for a minute from a wheat and corn perspective. In order for that to be true, you have to first throw something new at the market in order for it to be true that those disruptions are going to send us higher. And you have to have, in order for us to go higher and sustain it, you have to have some sort of a economic situation that other countries can't fix. So if the Ukraine loses its wheat and we can't export any of it, then you can't be able to grow it somewhere else and replenish the supply. Well, that's just not true, because our balance sheets are so fluffy with extra wheat globally, and there's so much growing capacity for wheat everywhere else. All we have to do is plant it. Now let's think about corn. We covered this last year when the war was happening, but with the Ukrainians exporting about 1 billion bushels of corn, it's pretty easy for South America and the U.S. to increase production by 1 billion bushels in order to absorb it. So, in fact, it's only like a 4.5% increase, I think is what the math was. So it's relatively simple for us just to push some acreage around to increase the corn production and still have lower corn prices, even with a bigger invasion and the Ukrainians moving away. And this makes sense, because anytime an efficient market is going to encourage production in one space and absorb the loss from another space. So if the Ukrainians plant corn and start exporting it, that's just bearish corn. It's not bullish if they took it away, because we've already reallocated it. As part of what's going on with beans, because beans are imploding, and what they're doing is puking up acres, saying we don't need as many acres here in the U.S., so that's pushing acres over to corn, right? And fertilizer is doing the same thing by making itself cheaper. So our corn acres are going up because of by attrition, because beans are collapsing, and our wheat acres are staying stagnant because we haven't collapsed it yet. So if if corn stays where it is, or we just start moving sideways, then we're going to grow plenty of corn. We're going to maintain some of our wheat acres, or if it doesn't look like we have enough corn acres, then wheat can collapse and buy corn acres that way. Otherwise, we'll keep our wheat price high to make sure there's plenty of wheat for export, and our corn situation will take care of itself because we just have so many acres to plant. So the Ukraine situation is no longer bullish, it is bearish, even with an invasion, in our opinion. And I know that's some weird logic, and some of it is somewhat counterintuitive, but the more I read about it, and the more I think about it, I think that's what we're dealing with, is just an efficient market, and the market is doing its job, and it's doing it perfectly. That's what our role is here in the U.S., is to manage that global flow of and production of grain, and we're really good at it. So I don't think prices are out of whack. I think they're doing exactly what they're supposed to be doing. Okay, that's a lot. I know that's counterintuitive, and I know it's kind of hard to get your head around. But basically, summarize it. Hey, look, we've known about the war a long time. Markets are efficient. They've already figured it out. And now we're just kind of waiting on planting, and we'll just keep addressing what we need to do with prices. And the only way we're going way higher, in our opinion, is if we get another big weather scare and we burn up another crop. Other than that, lower we should look because of everything going on from a supply and demand standpoint. All right, that is 11 and a half minutes. No changes technically, bearish, fundamentally bearish. Until something changes, we're going to stay that way, and that's the tune we're going to keep hammering. So no adjustments needed as of Thursday afternoon. All right, remember, there is risk trading futures and options, and you should only do so in light of your own financial condition, and you should work with a professional. If you have any questions at all, we are here to help and would love to visit with you about it. Hope you guys have a great day. We'll talk to you later.